Hello there, and welcome to the third quarter 2024 video review of the iSectors CryptoBlock Allocation. My name is John Koch, iSectors Senior Investment Analyst, and I'm joined by the CEO and CIO of iSectors, Vern Sumnicht.
Thanks, John.
No problem. We'll get it started. In case you aren't familiar with this strategy, it is a 100% ETF-based blockchain/cryptocurrency-focused model with a 3.5-year track record. We created this model in 2021 as a way for advisors to access exposure to the cryptocurrency space without needing to worry about cold storage wallets, tax reporting issues, and other hurdles, while at the same time reducing volatility versus Bitcoin and other cryptos by complementing this exposure with blockchain-focused companies and other broad technology ETFs. Currently, it's only available on limited platforms, but if any advisors have interests in a model like this, we can work together to get it on your platform of choice. So switching over to the model itself, last quarter we made some updates to CryptoBlock that came in the form of adding a spot Ethereum ETF and selling a crypto miner ETF. You can see the current allocation in the pie chart on the right there. The volatility of crypto-based equities has been increasing in recent years as the amount of Bitcoin they mine gets smaller and smaller with each halving. We felt comfortable adding Ethereum to the model in place of these miners because Ethereum really is a direct application of blockchain technology, and its performance isn't tied directly to the price of Bitcoin like it is with the crypto miners. They really need the price of Bitcoin to be high in order to maintain a profit. Ethereum's performed better than the miners with lower volatility since 2021, as you can see on the chart here, and it fits into the blockchain technology portion of the model perfectly. Spot Ethereum ETFs launched in July, and we made this change in September, which gave us a few months of data to analyze and choose the best Ethereum ETF for the model. However, we do want to make it clear that when it comes to pure cryptocurrency exposure, our preference is still Bitcoin. This is probably obvious with the 60% Bitcoin exposure you saw on the previous page compared to the 4% Ethereum exposure, but it does warrant some additional explanation. Bitcoin provides a store of value and is much less likely to get replaced by a newer technology. It's a trustless, strong money with a known monetary policy where only 21 million coins will ever exist, and we know exactly how many new coins will be created every year until that 21 million cap is reached. Ethereum, on the other hand, we view, as I said before, as more of a technology that rose out of the blockchain. It has competitors like Solana or Polygon. Either of those might be able to create a better mousetrap than Ethereum when it comes to smart contracts and building effective layer 2 protocols on top of their platform. If you'd like to have a further discussion on the merits of Bitcoin versus other cryptocurrencies, we would be more than happy to hop on a call and make our case. We'll end by showing how well CryptoBlock has performed, net of strategist fees, versus various benchmarks over the last year. We show here the CryptoBlock in blue, the S&P 500 in green, the Index Blockchain Index in black, and the S&P North American Technology Index in orange. An 85% return is hard to come by in the model portfolio world, and that's exactly what CryptoBlock has done over the last 12 months on the way to outperforming the 3 benchmarks listed here.
And John, I think an important point here, despite the fact that CryptoBlock has done so well and Bitcoin has done so well, it's by no means not an opportunity. As a matter of fact, we think it's a great opportunity right now. If you take a look at Bitcoin and its performance, it's been very range bound since March and building a great base. We also note that this 2024 is the year of the halving, and every past halving, the fourth quarter of the halving year, again, the quarter we are in now, has been an exceptional performance. And the following year of a halving, which would be 2025 in this case, has been an exceptional performance in the past. So we think the opportunities are extremely good right now, despite previous great performance. There is real opportunity over the next 18 months.
Yes, absolutely. I agree, Vern. And there's great charts that we can show if anyone's interested of that 4-year halving cycle of the price of Bitcoin. It's been very consistent in its history so far. So Great point, Vern. We'll close here by showing our contact information. If you have any questions, please be sure to reach out to us. We're happy to discuss any of the matters that we talked about today. And have a great day, everybody.